Hi there, welcome to Kneppy Invest and welcome to another technical update video. It is the 15th of June 2025. Time is currently 10:36 a.m. We're going through my contract, just looking at the progress payments. I have to pay a deposit. I've already paid a little bit of that. Base, frame and close, fixing and practical completions. So there are 6 progress payments, probably over the next 6 to 8 months, I would imagine, as the house is being built. So you have to go through this contract, 134 pages, and then I have to tell them that I'm ready to sign, and then they'll send me the documents, and I can sign via DocuSign, I believe. So that's one of the reasons why I'm recording this video a little bit later than what I usually like to do. For some reason, I like starting recording these videos at about 10 a.m. Went for a nice walk along the beach this morning, 8-kilometer walk along a beach called Kiley's Beach, which is just along Crowdy Head of New South Wales. So a beautiful morning, a little bit cool, but it's been warming nicely through the rest of the morning. Okay, so in today's video, we'll go through, as I always do in these videos, go through indices, commodities, also have a look at crypto, see what Bitcoin and Ethereum have been doing. Then we'll have a look at bonds and currency. Also, I do have 16 individual companies planned to show you. These charts are looking interesting for various reasons. So let's get stuck into it and start with the XJO. Interesting week for the XJO. I'm assuming it was up slightly 0.37%, but a little bit of selling did come in during the week. Now, just because we have selling coming in during the week doesn't necessarily mean it's a bearish week, but we have seen the XJO rise. What is it? 9 out of the last 10 weeks, if I'm right. Maybe it's 8 out of the last 9 weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, 9 out of the last 10 weeks. And the 1 week it didn't rise, it was down 0.08%. So this has been a pretty good 10-week run for the XJO, and this is true for other indices around the world. So we should expect a little bit of weakness moving forward because of this pretty good rally. And in fact, this rally has been, let's just measure it, from the bottom to the top, has been a 20.32% rally. So there should be a little bit of profit taking coming in, and I think we did see that during the week. Now, this bit of profit taking also helped, maybe that's the wrong word, helped by a little bit of increase in tensions in the Middle East, which is still happening. In fact, on my other computer, I do have CNN up, having a look at the sort of the live commentary of what's happening alongside the Minnesota shootings. A couple of politicians in Minnesota were assassinated overnight. Interesting times we're in, and of course, they had a big military parade. Big military parade in Washington, D.C. on Trump's birthday, although it's also the 250th anniversary of the Army. That's the main reason they had the military parade, not because it's Trump's birthday. June 14 is also Flag Day in the United States, because you just Google June 14, because I'm pretty sure, I could be completely mistaken, pretty sure the American flag was first devised on that day or something like that. Flag Day, United States, June 14, commemorates the adoption of the flag of the United States on June 14, 1777, by resolution of the Second Continental Congress. So there you go. So my birthday is pretty famous for various reasons, and probably the biggest reason is it's called Flag Day, and it's also Donald Trump's birthday. So they decided to have parades on that day. They didn't. They already started this well before the elections last year, by the way. That's what I've heard. Anyway. Okay, so back to what's happening right now. Well, I was talking about the Middle East tensions, and I went on a little bit of a tangent, talking about CNN, Flag Days, that sort of thing. Anyway, and assassinations, interesting times we're in. Anyway, so if you have a look at the daily chart, the XJO did reach all-time highs during the week, and on that particular day, which would have been Friday, Wednesday, we did see a little bit of selling coming in, and that selling has continued during the second half of the week, but still up for the week. I wouldn't be surprised if we do see a few down weeks, but it wouldn't be surprising to see this good run continue. Well, I think that would be a little bit more surprising than a few down weeks. Okay, so that's the XJO right on all-time highs. So this is a bit of a resistance zone because of that. Now onto the XSO, and XSO looks a touch little more bullish. And the whole reason it looks a little bit more bullish is because it broke out last week and has remained above the breakout level. That's a good sign moving forward for small caps. However, it's going to be interesting to see what happens tomorrow on our market. We had the anticipated down day on Wall Street, Dow Jones down 1.79%, which was a little bit more than expected. And the NASDAQ wasn't down as much as expected, only down 1.29%. We also saw, and the whole reason I know this is because I'm older, we also saw Oracle up 13% on Thursday, up another 7% on Friday. And I didn't have a very close read of their results, but what I did read, it was very bullish. And you can sort of see that just in the market reaction. Yeah, 2-day reaction, share price up probably 20 to 25%. Which just shows you how bullish that reaction can be. So I'm wondering if that has sort of played into the NASDAQ not having as much of a bad day as expected. I'm just wondering. Doesn't mean that's the reason why. Anyway, so the small caps looks okay. I like it a little bit better than the XJO because it is just above resistance level. Now on the XTL or the ASX 20, this one looks like it has stored out right on the previous highs or very close to the previous highs. So I would say this is definitely in a resistance zone. Now, what I might do here is put in a little rectangle, sort of like a resistance box, you might call it. Resistance box. So over the past 6 months, no, even more than that, because we're in June now. So November, that's 7 months ago. So over the past 7 months, whenever the XTL has got into this purple box, we have seen it pull back. Now, it's only happened twice before, but we started to see it right now. So this would be a nice little resistance zone for the XTL. So not quite as bullish I am with this one compared to the XSO, even the XJO. What about tech? And this one is almost like a triple top. You could almost say this is a triple top. Might do a little rectangle box for this as well. There we go. Nice little resistance zone for the XTX. And the XTX actually had a really bad day on Friday in anticipation of NASDAQ having a really bad day that night. So the XTX was actually down 1.71%. So it wouldn't be surprising if we saw a little bit of strength in the tech indices. Now, this all depends also on what happens on American futures, which should start trading, I believe, tomorrow morning our time, about 7 or 8 a.m. I could be a little bit mistaken exactly what time. So we should see American trade or futures start trading it again at that time. And it's going to be interesting because this little bit of tensions between Iran and Israel, and maybe me using the word tension is sort of being underdramatic because, a lot of missiles and drones have been launched. People have died and just wondering how long this is going to continue. Now, I've mentioned that this is not the sort of thing that would make me go to all cash because we see these sort of tensions arise all the time. The way I would get a little bit more concerned is if we do see an escalation, significant more escalation than what we're seeing now. And another thing that would get me a little bit concerned is if we start seeing other countries come in as well on both sides. Anyway, so at this point in time, I'm not really concerned about these Middle East tensions. The other reason I might be a little bit concerned is if we continue to see oil prices rise, and that is going to have effects on economies around the world. The whole reason why the 70s had really bad inflation, or one of the reasons they had really bad inflation, was because of what was it called? The oil crisis or something. Oil crisis in the 70s. I forget what they called it. 1970s. The oil crisis of the 1970s. There we go. Specifically, the 1973 and 79 oil crisis were major events that significantly impacted the global economy and energy markets. Anyway, so I suppose that's an outside chance of happening here because, as you'll see, when we get to oil prices, there was a pretty big reaction there. Okay, so tech, the all tech indice, has just pulled out of a resistance zone. What about the banks? In fact, the banking sector, this one actually looks not that bad. We keep getting higher highs. So there was a high, can I mark this with like a cross? Do they have crosses? I'm pretty sure they did, but where? Where would the crosses be? All I want to do is just go cross, cross, cross. And no, don't want to do tweet. Maybe I just have to do arrow. Yeah, so right there. Oh, I'm going to have to click this all the time. Right there. Right there. Right there. Right there. And now right there again. So we keep getting higher highs. You might say the two highs during that week April period, March-April period, these are two lower highs, but yeah, so I'm cheating a little bit here, but not a bad index, this one, and it has pulled off from the all-time high. So funnily enough, even though I do think the banks are significantly overvalued, and when I say the banks, I'm talking about all of them. I did have a look at ANZ because ANZ chart does look interesting because it's actually not in an uptrend. It's actually in a downtrend, technically. It also looks pretty cheap compared to some of the other banks. P/E ratio of ANZ, only like 13. I also had a look at, what's the Bank of Queensland had P/E ratio like 25, which is insane for that company. So anyway, funny enough, yeah, the banking sector or the banking index looks like the best one on the ASX right now, which is, again, a bit weird. Okay, that's all I have for the Aussie indices. What about New Zealand? What about New Zealand? Let's have a look. Let's have a look at the NZX 50, and this by no way looks anywhere close to being as good as any of the Australian indices. In fact, if this was an Australian index, this would be the worst one. In fact, there's nothing to really like about this particular index. What I'm going to do now, I haven't had a look at the long-term history of this index, and it's really interesting that the highs for this particular index was back in January 2021. Now, prior to that, this is actually a really good index. This is a really good chart, going all the way back to the GFC. Yeah, this is actually was a really good index. So this is the first time I looked at it, and wow, if you were invested in New Zealand or companies within this particular index between 2011 and 2021, you did really good. In fact, it rose by almost fourfold during that period. Not quite, but almost. Wow. That's the first time I've looked at the weekly chart for that index, and geez. Anyway, but right now it's not looking that strong at all. And the other thing is we've had three moving average crossovers in the last month and a bit, and that is telling me that there's no strength in there's no trend in the indice right now. Okay, now on to USA indices, starting off with the NASDAQ, the NDQ, which I believe is the 100. And NASDAQ got very close, the previous highs, very close. So this is sort of like the XTX, almost like a triple top here for this particular index. A pretty good bounce for the NDQ. I'm just going to measure how far it rallied. I'm thinking 25%. Let's have a look from the bottom to the top. Oh, 33%. Wow. So I was a little bit off there. So 33% rally from the bottom to the top. So a really, really strong, powerful rise. And again, I do think there's going to be a little bit of profit taking because of this pretty significant rally over a short period of time, like a V-shaped recovery, which I really didn't expect, to be honest with you. Really didn't expect a V-shaped recovery. The second time that's happened, I didn't expect a V-shaped recovery coming out of COVID-19, but when it was really obvious that V-shaped recovery was happening, that's when I really started investing. That was a week after we saw the bottom. So it only took me a week to change my opinion on that. So the NDQ looks toppish. We need to see it get to a new all-time high before I get interested in the NASDAQ, although I don't really trade the NASDAQ, so it doesn't really matter. Anyway, but now Jones, this one is nowhere near looking as strong as some of the other indices. In fact, this one is probably the second weakest, maybe just a little bit better than the New Zealand one, but well off the all-time highs. And we haven't seen much movement in the Dow Jones over the past month. Got to this level on the 12th of May and really has been going sideways ever since. And we did see a pretty big down day on Friday session. So if we didn't see that down day, in fact, if we had a good day on that day, it would look much better. But right now, yeah, not bullish on the Dow Jones at this point in time. And what about the Russell 2000? Down 1.8% on Friday session. And this is similar to the Dow Jones, nowhere near as good as some of the other indices. Well, still well shy of this little resistant zone was support. So well shy of that right now. And the rally from the lows, not quite as good as what we saw with the NASDAQ. So the rallies, actually right now, only up 21%, which is sort of like the XJO. There you go. But at this point in time, yeah, this is sort of similar to the Dow Jones. In fact, I'd probably put the Dow Jones just ahead of this one. Yeah, just ahead. Okay, now on to some international indices. And I'm wondering, without looking at these, I'm wondering if, or the DAX was down 1%. I'm wondering which one looks the best. I'm thinking maybe the Canadian one, the TSX, the Toronto Stock Exchange. I'm wondering if that is the best looking index out of all of these. I don't think Nikkei would be. Nikkei just is not doing anything for me right now. There is no trend at all. Maybe the one thing you could say, maybe there's a slight uptrend, but that's about it, because we did see that, again, that bounce, really significant bounce, just like we saw during the yen carry trade. Bounce has come to an end, and the level at where we've seen this bounce come to an end is a little bit lower than what we saw during the yen carry trade. So this index is not doing anything for me right now. Hang Seng was looking good. I think it still looks okay. I'd like to see this get to a new all-time high. So that would be above 24,800. But overall, I think it could do it. I think it could, if we see a nice little rally over the next few weeks. So it looks not that bad. I don't mind this one at all. Now, the DAX has been looking the best, all-time highs after all-time highs. And it does look like this one is rolling over, doesn't it? Sort of like you can see, just before we had that collapse in April, late March, April, sort of see how it starts to roll over. This one is showing the same sort of characteristics. Started to see it roll over. Now, this could be the buy the dip situation, because there are a lot of buy the dip investors out there. So they exist everywhere, including Germany. So some of the German investors might be seeing this little dip as an opportunity to buy some more shares. Maybe. We'll wait and see. So this one is looking sort of interesting as potentially more downside to come. FTSE has found a bit of resistance. Oh, look at that. Beautiful. Beautiful. So the FTSE got to its all-time highs almost perfectly. Let's see, on the 3rd of March, the all-time high. I'm assuming this is an all-time high. Let's just confirm, going back through history. Oh, yeah, no worries, no worries. It's the all-time high. And it got to the all-time high on the 3rd of March and the high that day was 8,908.82. And it got very close to the all-time highs on Friday session, got to 8,898. 8,898. So it was just a little bit short of the all-time high. So that level is a bit of resistance, particularly if we see a little bit of more downside from here. That would sort of show that 8,900 is a nice little resistance level for this particular index. And the whole reason it's resistance is because people know the high was that level. And as soon as they see to get to that level, we do see a little bit more selling coming in. Not everyone sells, of course, but we do see a little bit heightened selling, because that would be potentially a sell signal to some traders. And finally, to the TSX. And I'm thinking this could be the best looking one. So at this point in time, I think the best looking index here, I still think DAX looks good. Hang Seng looks good. I wonder if this is the best looking one. Come on. Oh, yes. I will go with TSX just because I'm a little bit biased, because I already said it was going to be the best looking one. I've always thought of this as a nice little proxy for the ASX, but the Canadians are doing better than the Australians right now with this. Yeah, this bounce has been pretty phenomenal. Well, it looks phenomenal, but has it really been? Let's have a look. In fact, it's gone up only 19.6%. There you go. So the rise hasn't been as strong as, say, the NASDAQ, but again, that's pretty obvious why. But yeah, well above the all-time highs, and only a little bit down on Friday's session. So the selling didn't really catch on in Canada. And the whole reason I've always thought of this index as a proxy for Australia is just because fairly similar makeup. A lot of financials, a lot of mining, which is just like the ASX. Okay, so that's the indices around the world. I say TSX, Hang Seng, DAX, top 3 indices right now. A few others just behind, but the reason these 3 look the best is just because they're near, well, DAX and TSX are near or just pulled back from all-time highs, and the Hang Seng chart actually does look okay. Okay, and now onto some commodities. We'll start off with gold, and gold looks really good. Just read an email talking about how the Trump administration is planning for them to go back to the gold standard, which means gold will go up 1,000% or something like that. What do you think they were trying to sell? Yeah, anyway, so who knows? I have whatever. Anyway, so gold looks good. Right on all-time highs. Well, it finished near the all-time close. If that makes sense. It finished near the all-time close. So even though on the 22nd April, gold was higher, it actually closed down that day by 1.3%. On the 6th of May, it did close at 3,437. And on Friday, it closed at 3,433. So very close to closing at the all-time high. Well, closing at the all-time high close. Yes, got to make sure I say that because there was that little spike on the 22nd of April. Gold chart looks brilliant. No complaints about the gold chart at all. I don't think you could. Even the weekly chart probably looks really good as well. They sure look good. But probably the only concern I would have just by looking at the weekly chart is this running gold, this really nice running gold over the last we'll say a year and a half, has been quite spectacular. And you could just say and argue it's time for a bit of a breather, sort of like what we saw between 2019 and 2020. There was a really good run there, and then it went on a breather for about 2 years, or maybe even 3 years. So that's what I would like to see with gold. Now, just because gold's going up doesn't mean it'll keep on going up, because you can see the last time we had a really good bull run in gold, so that was probably a 10-year bull run. Even during this bull run, we did see periods where gold pulled back a fair bit. Yeah, and then after that high in 2011, gold pulled back quite significantly. In fact, it almost halved. I still remember that period, 2011 to about 2014, maybe even longer than that, because if you ever watched what was it called? Sky's Your Money, Your Call, something like that. What I found really interesting during that period was so many days gold was the best performing asset, and then the next day it was the worst performing asset. Saw that a lot. And when that sort of thing happens, when an asset can be the best performing and then the worst performing, usually it's in a bear market, because that's when you see a lot more volatility. And that was definitely true back in those days. Okay, so it's gold, looking pretty good. No complaints with gold. I wonder if anyone is complaining about gold. Does anyone have complaints about gold? If you have a look at the weekly chart here, it does look like it had a little, like a 2-month breather. And that sort of does make sense. If you have a look at the daily chart, it did go sideways for a while, a little bit of volatility in there, but still looks pretty good. Silver looked interesting last week. This was on my radar, and it still looks pretty good. Still looks good. We had the breakout end of last week. And for the week itself, silver was up slightly. By the way, gold was up 3.75%. Silver up slightly, but that's okay because the previous week it was up a lot. So I do like this chart for silver. So there are a few silver companies on the ASX. I mentioned a few last week, and then you gave me a few more. Who was it? Now I've got to put the silver. Got to put silver in here. Oh, there we go. Don Kesby, Dear Kneppy. Other silver players to look at include USL, ARD, and SS1. Sun Silver. What's USL? USL is, what's happening there? In fact, I don't have to do that. What I can do is USL, Unico Silver. Let's have a look at some of these. Let's have a look at the chart of some of these. It's not a bad looking chart. Sun Silver is a recent listing, I believe. So listed just over 1 year ago. Sun Silver, and what else was there? There was ARD. I don't know this one. Argent Minerals. There you go. That sort of chart looks fairly similar to the Unico one. And the other ones I did mention were Indian Silver. There was also, chart looks like it doesn't look the best. What was it? Silver Mines. Ooh, this chart looks good. I do like this chart. And Adriatic. Yes, and this one's in production. So thank you for that. Okay. Back to, I think we can finish with silver. I think I like silver chart. I like it. Hot copper. No, just copper, not hot copper. Does copper look hot right now? No. Nothing to like. Well, nothing. It's definitely not one to like as much as gold and silver. Definitely like gold and silver a little bit more than copper. And yeah, at least it's not dropping like a rock. I'd be more interested in copper if it drops towards $4, but no interest in copper right now, which is interesting because I did have a look at Senfire chart, and I keep looking at this chart every week, and it's just come off all-time highs, which is interesting. And some of the other copper companies I would look at include 29 Metals. I wonder if this has been increasing. I wonder if this is, no. And what's the other one? What's that other one? I just can't believe I forgotten it. It would be in my mining. No, it might be in my. No, it should be in my mine. Oh, it might be in my spore producing miners. Yeah, that's right. Aries Resources. So this is another mining company or copper company, and the chart looks as well. Okay, back to, I think we've done enough on copper. Iron ore. Okay, this one's interesting. I did have a look at iron ore just before I started recording. And this one's interesting. Iron ore prices have fallen, and they've fallen into a nice little zone, a nice little support zone. Now, this support zone only goes back to about April of 2024. So I'm talking about 1 year ago. But back in September of last year, the iron ore prices did fall into this level, and then we saw a pretty good bounce. It fell into this level back in April, then we had a bounce, and it's in this level again. So this level is, or this zone is between about $95 and $90, so $5 zone here. Now, it doesn't go all that far back, but that's the only reason to be a little bit excited about iron ore right now. Otherwise, the chart looks horrendous. And if you do have a look at some of the iron ore plays on the ASX, there's nothing to really like there at all. BHP chart looks meh, downtrend there. Rio Tinto chart, downtrend. In fact, Rio Tinto, yeah. And Fortescue looks pretty crappy as well. Yeah, nothing to like there in terms of the chart, maybe valuation. Some of the smaller ones look a little bit better, but even Phoenix, which is a much smaller one, this one's share price is going sideways. So this is probably one of the best looking iron ore charts on the ASX. I don't know if BCI is iron ore company anymore. Not sure. I haven't looked at this one for a while. So this could be the second best looking one, maybe even the best looking one. Okay, so back to iron ore. Yeah, so the only reason I could think of any reason to like iron ore is just it's in that zone between $90 and $95. Now, below that, there's a nice little support area at about $80, which were the lows in iron ore back in October 2022, and also the lows back in 2019. Uranium, I do like uranium too. So if you have a look at the daily chart, It looked like it wanted to break above this downtrend a few weeks ago, and then it pulled back. And then we had a nice little rally on Monday, and it went above that downtrend line, and it has stayed above that downtrend line the last few trading days. I do like this little chart for uranium, so maybe I should have a look at the uranium ASX companies again. I do have a little watch list here. This is actually in market cap order. So the biggest company, uranium company on the ASX, is NextGen Energy. Do I like that individual chart? Paladin. I don't mind this one. They did release something good. When was it? I forget. 26th of May, maybe? No, it was before that, I think. Not as good, but if uranium prices have broken out, this one I think will turn positive. Boss Energy was looking the best recently. So this probably is the best looking one. Deep Yellow, no. Lotus, no. Bannerman, no. Berkeley does look pretty good. Peninsula is going to look awful. Yeah, it looks the worst. So if I did ever choose any of these, I actually don't mind Paladin. Boss Energy looks like it has traded higher. So maybe I should be paying a little bit more attention to uranium just based off what's happening with uranium prices right now. Now, this is not uranium. This is the Sprott physical uranium, so it's a little bit different. Oil. Now, oil up huge the last few days. In fact, the price of oil got as high as $78 on Friday. Yep, Friday session. And that peak in the oil probably happened just after, was it 8 a.m.? Happened at midday. So it took about 4 hours for oil to get from the start of the tensions in the middle. Well, it's not the start of the tensions. It was the first strike Israel made against Iran. So it took about 4 hours before oil rallied from below 69 to $77.50. Has pulled back a little bit since then. And the last time oil traded was on Friday evening. So it's going to be interesting to see what happens when oil trades back again, because the tensions are still going. So CNN just has a new update. Several buildings directly hit, say, Israeli emergency responders. Anyway, so all my eyes on oil. I do have a few oil plays, thankfully, although one of them hasn't really gone higher. But Karoon, have to show Karoon. This is a brilliant looking chart. Nice chart for Karoon. Another play could be Beach Energy. Give me some more. Beach Energy. This one does not look good. Trying to think of other ones. The one I was thinking, oh man, if oil prices go higher, this one should break out, but that's Brookside, but just does nothing. There's just too much negative sentiment in this company for any good uptrend to start now, I think. So that's Brookside Energy. Natural gas didn't do much. Not much of a trend there either. Lithium, not doing much at all. There are a few lithium companies charts that do look a little bit more interesting. And in fact, I do feature one of those. Yes, I do. Coal, yeah, nothing much there. Has rallied from the lows. We have seen the coal share price rally as well. The other coal companies, not quite as much, but for some reason, Yancoal share price has rallied in line with gold prices. So this is a pretty big rally for Yancoal. Otherwise, tin, meh, nickel, meh, and finally, Palladium. Palladium looked like it was breaking out. We did see it pull back a little bit on Friday's session. When I say a little bit, down 3.2%. So we should see Zimplats, which is the only Palladium play I know on the ASX. Zimplats, a Zimbabwean mining company. We saw this one just zoom high on Tuesday for some reason. And this is, or looks like, a brilliant breakout. Potential breakout. Yeah, it looks pretty good. But I do expect the share price of this one to pull back just because Palladium prices pulled back late Friday into Saturday morning. Okay, so that's the commodities. Won't have a look at cocoa. Now on to cryptocurrency, starting off with Bitcoin. Uh, I was a little bit surprised. Bitcoin didn't drop a lot on Friday. So it did drop a little bit, but not a lot. Where's Friday? So Bitcoin trades, there it is. It did drop, but not substantially. So let's just zoom in. And then it recovered fairly quickly. I suppose it did drop. It went from 106,000 to 106,000 down to 102,000. So I suppose that is a bit of a drop. But it has recovered fairly nicely since then anyway. Has recovered nicely. It's not dropping from the recent all-time high. So it did get to an all-time high about a month ago, 22nd of May. So the good thing is it hasn't dropped significantly since then. And I would imagine a lot of people will be selling or thinking of selling because it got to the all-time high. But the good thing is Bitcoin keeps on getting to the all-time high. We've seen 1, 2, 3 all-time highs within the last year. Ethereum was looking interesting and still looks sort of interesting. There was a very weak breakout on Tuesday. That breakout failed on the next day. So Ethereum has been going sideways. So there was a potential breakout. What I'm looking for here is any sort of movement in the price of Ethereum above this trading range. And it really tried on Tuesday, but sort of pulled back on the Wednesday into Thursday. So it's still in that trading range at this point in time. And next, we'll have a look at some bonds, and bonds up on Friday, 4.9%. I'm wondering if this rallied. This probably rallied on. Wait there, that's June 14. No, in fact, it dropped. It dropped a significant amount. Maybe not a significant amount, being a little bit over dramatic. But for some reason, bonds rallied really a fair bit on Friday night session into Saturday morning our time. Don't know why. I wonder if this does tell us anything interesting. Investors choose safe havens, oil over equities as Middle East erupts. Okay. Middle East jitters derail drive to new highs. No, nothing about bonds there. But anyway, the main thing is bonds are still near 5%. And yes. And Aussie dollar's dropped below 65 cents. So it's a one-day thing. I don't mind this chart, by the way. It's a nice little grind higher. So grinding higher. I do like that. Although I wouldn't mind to see the Australian Aussie dollar go from 65 cents to $1.65 in one day. That would be pretty nice. Will make my holiday much cheaper. I have bought a few things. I have booked a few bits of accommodation, but it would be really nice to see the price of the Aussie dollar rally a fair bit. Then I'll convert some money to Aussie dollars. No, to American dollars, not Aussie dollars. Okay, now on to the individual company portion of the video. And I'm going to go through this fairly quickly. Why not? We'll go through this really quickly. I've got 16 companies, and I don't really want to speak for another 22 minutes. Anyway, so Helloworld. Noticed a lot of travel companies on Friday did fall away. The reason Helloworld was intriguing to me is because it is at a support level at $1.34, just above the COVID-19 high. So the pessimism in a lot of travel companies is maximum right now. Maximum right now. Potential value and potential, just a nice little possible trading stock here. So you would say the pessimism, like in this company, is fairly similar than the pessimism we saw during the maximum worst period in COVID-19 when the markets just dropped like a rock. Now, Helloworld did get down to a low of about 80 cents. So still a little bit above those high or lows. But yeah, so a lot of negativity in the travel sector right now, including Helloworld. Cosol, I was thinking Cosol could be a nice little value play. And then the share price has just collapsed. They did release some sort of trading update, and the share price has just collapsed. Now, I'm just going to bring in the volume. There it is, the volume. We have seen a little bit of volume coming in as well. So someone is selling out of this one. And then I look at the weekly chart and notice the share price is at a nice little support level as well. So has remained above 50 cents, except for one day just after it listed. And that day we did see the share price starting to rally again. So maybe some value in this one. The one negative thing is just the volume. We have seen a really big volume we've seen the last few days, which is telling me there is someone selling out of this company. Now, next company is a company called Aquirian, a very small company. Was probably wouldn't have mentioned this company, except I did see this company mentioned. I think it was in Livewire or something like that. Someone just mentioned Aquarian. I was like, whoa, mentioning this company, which is really small. And when I say really small, I mean this company probably has a market cap of 30 million. Let's see how right I am. 35.49 million. It was even lower because the share price was down at 17 cents. It has doubled in the last month and a bit. And this is a breakout. This is a great example of a breakout. On the 24th of January 2025, share price of Aquirian rose 63.9% on the day. Can't tell you what happened on that day. So let me just Aquirian, what did they release on that particular day? What the date was the date again? 24th of January. So the reason I like to do this when I see these sort of breakouts is just to have a look at the sort of announcement that can lead to a breakout. 24th of January, Western Energetics secures 3-year supply agreement. There must have been some numbers in this, I would assume. Yep, agreement value 20 million circa, 3 years commencing 1st of January 2025. Now, I think the reason why that's exciting is if you have a look, so just at the half-year report, does this company release Appendix 4C? Looks like they don't. They also did a placement. But if you just have a look at the half-year report, so $20 million over 3 years, that would be pretty good for this company, I'm assuming. Yeah. So in the last half year, they had $13 million of revenue and were slightly positive, had slightly positive EBITDA, but had a slight loss. So it seems like that was the catalyst for a bit of a breakout for this company. The other thing to pay attention to is the volume. So really good volume on that day. And just look at the volume after that. Look at how the volume has remained high compared to the previous to that particular announcement. So definitely that was the catalyst for the breakout for Aquirian. So you can just you can learn a lot just by looking at charts and looking at the volume. And then looking at why the share price has broken out. Jupiter Mines, this is another looking like another breakout. Share price rose 37.9% on the 13th of May. I can't remember what happened on this day for Jupiter Mines. Don't know much about this company at all. What date was it? 13th of May. And they sale of 13% effective interest in T-Shippy for $101.4 million. So they sold something and got a lot of money. And that's why the share price popped up. Now, what I like here is just how the share price has performed since then. There was a pretty volatile day the next day, and the share price has gone relatively sideways since then, which is a good sign moving forward for Jupiter Mines. Now on to a bad news story, Enero Group. We'll have a look at the weekly chart. So share price of this company went as high as $4.20 in 2021. Looks like, yeah, late 2021. During COVID-19, share price fell to about 80 cents, maybe 80 cents. But this has been a disastrous last 3 years for Enero. Share price has dropped from $4.20 down to 67 cents. And I believe one of the reasons why the share price rallied in 2021 and 2022, 2020, 2021, was because some sort of tech they had, some sort of software they had, was leading the charge forward. And I think that has gone in the different direction. That software, I don't know exactly the story here, but I just remember someone talking about the reason I liked this company back then was some software this company had that was really good. And no one likes this software anymore, or something like that. And that's one of the reasons why the share price has dropped a lot. Otherwise, this company is into advertising, marketing, that sort of thing. I think it's mostly marketing. Integrated marketing and communication services. I'll see if they mention that software. No, they don't even mention the software here. Anyway, so how low could this go? Maybe a lot lower. I was thinking maybe did I put this into my, yeah, I put this into my cheap ASX watch list just because the, go a little bit higher, just because, where am I? The market cap now is like $61 million. So it wasn't that long ago. This company had pretty good profits. Yes, in 2023, this company had $56 million in profit, and now the market cap is $61 million. Now, last year, they had $804 million in revenue and were loss-making. So revenue has been climbing. Now, I'm just going to have a look at the last half year. Revenue was still about $400 million, but they still had a loss. So if they can get back to profitability, this company could be cheap, but the market just doesn't like this company at all. Okay, so GTN. The weekly chart looks really interesting. I like this weekly chart. Share price in long-term downtrend. Down and down and go. Nice little consolidation period. And just by looking at the weekly chart, we had a moving average crossover and the share price is moving up. So GTN, I'm trying to remember what they do. So it's in the media field. They do traffic reports. For some reason, I think this company does traffic reports. Something like that. So they have the helicopter in the sky who does the traffic reports. And for some reason, I believe this is international. So they do for some reason, I don't know why, they do traffic reports in Brazil, including Australia. Okay, advertising platform designed to enable advertisers generally large, or yet to reach demographics cost effectively. It's collate information for traffic reports from a range of sources, including aircraft. Yes, founded in 1997. I don't know why I remember that about this company. I just find it fascinating that that is a business. And that's GTN, and the weekly chart doesn't look half bad. If the weekly chart doesn't look half bad, the daily chart should look pretty good as well. And the daily chart doesn't look all that bad either. I think I've mentioned, someone mentioned IVE Group. I had a quick look at it. This one looks potentially cheap. The chart looks pretty good as well, daily chart. If you have a look at the weekly chart, it is at a long-term chart. It is at, I haven't put the line in here, but it is at or near an all-time high, which is not necessarily a bad thing, particularly if its company is cheap. So that's IVE Group. Maybe one to investigate, because if you have a look at the market cap, 418 million market cap, dividend yield 6.67%, and the P ratio 10.32. Whenever I see dividend or the P ratio like that and the dividend yield, I just go back through the history just to see if there was one-off. And this company has had profit between $20 and $28 million 3 of the past 5 years, which would mean, yeah, actually, the last half year they had profit of 27 million. That's why the P ratio is 10.32. So last half year's profit was abnormally high compared to what this company has experienced in the past. So maybe that P ratio is a little bit inflated by last year's half year results or this year's half year results. Okay, Codan. Yes, Codan's in this list because it's at it's right on all-time highs. So really nice rally for Codan. It's gone from $4 to $19.38. This is sort of like an indirect, or it can be an indirect gold play because they do sell gold detectors, primarily in Africa, I think. They are more diversified as they were in the past because they're into communications as well. So really nice looking chart, but at all-time high. So wouldn't be surprised to see a little bit of weakness here, but look at that rally in the share price since the lows recently. It's gone up 50%. A Vulcan, again, nothing to do with Star Trek. Why Vulcan? Well, look where the share price is right now. So this is one of the lithium plays, and there is a nice little, just going to get rid of this line. There is a nice little support zone or support price at about 360. Going all the way back to March of 2024. And we've seen the share price get to this level after the breakout. In fact, the breakout was the 8th of May, so 1 year ago. There was a nice little breakout, share price up 10% on that day. And since then, share price has pulled back to 360. 1, 2, 3, 4, 5, and this is the second time. Now, when I say pull back doesn't mean right on 360, but it's getting very close to 360, currently 378. So this is like the sixth or seventh time it's pulled back to this level. Now, there is, some people would say that means it makes this little support zone a little bit stronger, but there's also people who say, well, the more times the price tries to pull through a resistance or support level, it weakens it. And I'm in that camp. So the more it comes back and tests it, the more likely it's going to fall through. So I wouldn't be surprised to see Vulcan Energy fall through that level. EROAD. Why did I include EROAD? Oh, this is a great, yeah. So this one, share price, they released a nice little update or something, or maybe it was financial results, and the share price took off, broke out above the previous highs back in August 2024. And what you want to see when you see that breakout is you don't want to see the share price fall back below. Now, it briefly fell back below on the 3rd of June, but then it rallied during the day, and the share price has just remained above that breakout level for about 6 or 7 trading days in a row. That's a good sign, but doesn't necessarily mean it will stay above it. But we just need to see a little bit more buying coming in. So that's a nice little, potentially nice little chart for EROAD. Now on to buyer beware. Calix. Well, not buyer beware. Calix. Now the reason I've included this one is because Calix was a favoured company for one particular member of AusBusinessCorp. I won't say who. Not that it's the wrong thing, but I would say Calix is definitely a story stock. Definitely a story stock. Very little revenue, if any at all. $13 million of revenue. And, well, that's in the last half year. So they do have $24 million of revenue. So, but the problem was they had about very little revenue. So below $20 million, when the share price got to a high of $9.50, and I believe the market cap would have been like 600, 700 million. And I thought it was nuts, but still someone on AusBusinessCorp was saying this was a great company, had a lot of potential, that sort of thing. And this is the problem with story stocks, because there's no financial backing. There's nothing to back up the valuation of the company. You can't say, well, this company looks cheap. We don't know. We just don't know with story stocks. It could look cheap. It could be cheap. It may not. Just don't know. And because of that, the share price, when the sentiment just sort of deflates, when the enthusiasm just deflates, when everything just deflates, this is what can happen. Share price of Calix has dropped from $9.50 down the current share price of 28.5 cents. That's a drop of 97% in 3 years. And I don't think that particular person, AusBusinessCorp, is mentioning this company anymore. So definitely the enthusiasm of Calix has completely gone away. And there's no end in sight just yet. The share price, the downtrend is coming to an end. There's no sign of that just yet. The best way the company can end this downtrend is to create more revenue, more receipts, become profitable, that sort of thing. That's the best way they can do it. Highcom. Now, this company is really small in terms of market cap, 24 million, but they were profitable. I was surprised. They announced a profit last half year, and they sell armor and something to do with drones. I forget what they do with drones, but they sell armor for military, police, that sort of thing. And share price dropped a lot. February 2024. Still remember that. And I think it was the previous CEO, but the board was really proactive. They got rid of the CEO, brought in the CEO, and everything has calmed down for this company. Share price went sideways. There was a couple of times when the share price looked like it was breaking out, and then the share price pulled back, which is understandable. And this may be the breakout for Highcom. Still really cheap for a profitable company. Yeah, 24 million, P ratio 9.16. So maybe one to put on your watch list. Now to a company I know nothing about. Nanollose, with 2 L's. Nanollose, NC6. I wouldn't even have a clue what they do. Something to do with health. Markup is $19 million. Looks like it's a story stock. Developing commercial supply chain of microbial cellulose from a variety of waste streams. Its products include nullable fiber and garment and jelly grow. There you go. Founded in 2014. But look at the chart. Look at the chart. Something's happened here. Share price has gone a little bit bonkers over the last few months. In fact, 2025 share price has increased from a low of 1.6 cents to a current share price of 6.4 cents or something like that. So share price has gone, yeah, really bonkers. And it says, why does it do this? Oh, I went the wrong way. Share price at 6.3 cents. Can't tell you why, but the chart looks pretty good. And the volume, we did see a bit of a volume, higher volume coming in between December and March. And there's been spikes in volume, but the volume has started to go down, which could be a little bit of concern. Telix, okay, Telix, beautiful uptrend until maybe now. And I'm thinking, because I do own a fair few shares in this one, I'm thinking, you know, if I was just trading this, we are getting signs that the uptrend has come to an end, without doubt. And should I just, if I was trading it, should I just take my profits and find something that has more potential of moving into an uptrend or is ready in an uptrend or breaking out, that sort of thing? And then I was thinking, well, you know, what I could do is sell half of my holdings in Telix, keep the other half. And then if I see in the future Telix chart looks good again, I can just buy some more shares when the chart looks good. So I've been thinking about doing that with Telix Pharmaceuticals, because we have seen the moving average crossover. The trend is not there. The uptrend is not there anymore. It's come to an end, it looks like. And maybe a little bit of sentiment has come out. A little bit of the positive sentiment has come out of Telix. Challenger. This is one I am trading. And I bought on this little breakout on the 17th of April. I think I might have bought the next day. And I was a little bit concerned because there was a nice long resistance zone between about $7.15 and $7.80. And the reason that was a resistance zone is because from late 2020 all the way through to now, when the share price 1, 2, 3, 4, 5, 6, 7 times, when the share price got into this zone, that was the high, and then the share price pulled back. So it was a little bit wary about that. But again, I do believe the more time share price tries to get above or break out above a resistance zone or level, there's a greater chance eventually it will break out. So I thought maybe that's going to happen here. And the share price is trying to break out above this zone. So it's been above the zone for about 5 or 6 days. We did see a little bit of selling coming on Thursday session, then a little bit of buying coming in on Friday session. So right at the top of this zone, Challenger. So nice little breakout. They also did receive something favorable, I think. I forget what they received on. Oh, this was on 13 Thursday. Challenger welcomes APRA's consultation on capital settings. And finally, Synlait Milk. Okay, so that was a nice little breakout for this one. So this is sort of like a revisit for me. And because I was trading this, I got into a trade with Synlait Milk in January. It was a very short trade. Share price zoomed higher. And then we saw the share price pull back on the 25th of March. This was like a trend killer event for me. So I decided to get out. So it was a nice little profit. Wasn't as high as it could have been. And I just wanted to see what the share price has been doing since then, and really been doing nothing. In fact, it has dropped down to 62.5 cents. So sometimes I do like to revisit trades just to see which way the share price has gone. In this case, yeah, I suppose it's really done nothing much. It's just gone down a little bit. Anyway, so that is Synlait Milk. Okay, so that's all I have for this particular video, this technical update video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.